Coming up, why now is the time to consider whether your portfolio is diversified enough. This is Regions Wealth Insights. Welcome to Regions Wealth Insights. I'm Jeremy King. Today we're joined by David Tannehill, Director of the Investment Research Group from Regions Wealth Management. David, thank you for joining us.
Thank you for having me.
From your experience, diversification is important and not just during volatile times like this, correct?
Absolutely. We think diversification should be a part of the portfolio at all times and should really go beyond traditional stocks and bonds.
So what are some of the options then beyond the traditional stocks and bonds?
You have alternative asset classes, including commodities and real estate, but there are also hedge fund-like strategies, including long-short credit, long-short equity, hedged equity, global macro, managed futures, and event-driven strategies. And these are really designed to reduce risk in your portfolio.
And the bottom line is, with the lower risk of the diversified strategies, this provides a buffer or protection for investors during volatility, correct?
That's correct. Diversified strategies offer low correlation relative to the other asset classes, such as stocks and bonds, reduce the overall volatility of the portfolio, and helping the investor achieve better risk-adjusted returns.
Tell me more about the low correlated investments you mentioned and how that does reduce risk and protect investors.
Well, diversified strategies tend to act differently than stocks and bonds, and they move up and down differently than stocks and bonds. So while you might have a dramatic downfall in stocks and bonds, diversified strategies would tend to buffer those downside.
So what is the best time then to have diversified strategies in a portfolio? Is there a particular time that's better than other times?
Well, we think that you should always have diversified strategies in the portfolio. You never know when the markets are going to trade off, and therefore you need to have these instruments, these investments in your portfolio. And typically, an investor should allocate between 10 and 22% of their portfolio to diversified strategies for those types of events.
Now let me play devil's advocate for a minute. Stocks have seen tremendous gains over the last several years. If someone's holding diversified strategies, they may not have experienced such gains. Is that correct?
That's correct. Diversified strategies, generally speaking, have underperformed equity over the last several years. But that's not why you're holding diversified strategies. You're really looking for the downside protection. And as you know, the stock market has been running for a long time, and there might be a period of time at which it turns south.
So the bull market may be drawing to a close. Can you give us an example then of how diversified strategies might cushion the blow compared to traditional fixed income assets?
Well, that's a really good, timely question. As you know, the Federal Reserve may be raising interest rates later this year or maybe even in 2016. And with traditional fixed income, long-only portfolios, higher rates mean lower bond prices and potentially lower total returns. And diversified strategies, particularly those that are long-short credit, as well as relative value strategies, could help buffer any downside realized from higher rates.
And that really is the bottom line here. Diversified strategies can serve as that important buffer for investors of all types, correct?
Correct.
All right, David Tannehill, Director of the Investment Research Group for Regions Wealth Management. Thank you so much for joining us.
Thank you.
And we thank you for watching. We have more information and more insights online to help you and your family build, protect, and preserve your wealth. Just go to regions.com/wealth insights. Or if you'd like to talk about this or other investment topics in person, give us a call at 1-800-826-6933. We'll see you here soon for another edition of Regions Wealth Insights.